So in this video, I want to talk about the four levels of mastery when it comes to trading. And this video might probably be all over the place and stuff like that because it's not scripted. I have some talking points here that I would stare into every once in a while, but it's not so scripted. But anyways, let's get into it. So the first level of mastery is the information stage, right? And this is basically where you're everywhere. You're sourcing for information on YouTube, on Twitter, Discord, and every platform. Basically, you're seeking knowledge. This is that level where you're hopping from strategy to strategy because you're still in a cycle of doom where you're looking for a strategy that actually works. And dopamine basically comes from consuming content rather than actually taking action. This is that period where you think sitting down and watching a bunch of videos for hours is you being productive, whereas you're actually just mentally masturbating, right? And the one thing you need to understand in trading is that information doesn't make you money. The markets do not pay you for what you know. It only pays you for what you do with what you know. And the thing about this phase is that it is basically where most traders never cross. And I, for one, spent my first year of trading in this phase. Now, in my first year of trading, I used to think I would be a formidable trader if I just learned all the strategies out there. I would learn about Elliott Wave, I would learn about inducements, liquidity, SMC, and Fibonacci. In fact, I was called Fibonacci at the time because I felt if I learned all these strategies, there isn't a way that I wouldn't get so much confluence. Like I used to think the more confluence I had, the more formidable I would be. Like I wouldn't even lose. But what that did for me was this. If I tried to take like a buy or sell position, the thieves might be telling me we haven't pulled back into the retracement area yet. Elliott Wave might be telling me it's a triangle or an ending diagonal. SMC might be saying a different thing. So I was basically getting conflicting signals. And it took a whole year of stress and struggling, fighting against my own self, cognitive dissonance, to actually unlearn everything I taught myself. That is basically the first level of mastery. Now, if you are able to struggle and find your way through the first level and get into level 2, which is basically the execution phase. Now, in this phase, you start to execute on the things you learn in level 1, but you take action without control, right? And you finally pick a strategy that works, but you come to the charts with different emotions every day because you're not pretty much consistent. This is the phase where it feels like the strategy works sometimes, right? And it's basically where you're revenge trading, over leveraging, and all of those trading demons that a lot of people have to fight their way through. But at the end of the day, you are the variable, not the strategy. Yeah. And that's when you realize, I mean, the only time you get through this stage is when you realize that inconsistency is not a strategy problem. It's basically a discipline problem. And also, if you stay for very long at this phase, you are either going to quit trading or you're just going to be there for years and you still quit at the end of the day. But you basically need to level up and get to level 3, which is the control phase. Now, in the control phase, you have a bit of structure and risk management. You're starting to get into the acceptance phase. You're not chasing trades anymore. You're starting to take fewer trades. You're starting to understand that you need to wait for price to trade into your point of interest. Let me tell you what I used to do before. This is how I used to trade. So let's say there's a point of interest that I want price to, like an inflection point where I'm expecting price to turn around and price is up here. So what I would do is, because there's something about trading, right? The more you learn about the markets, the more painful it is for you when you are wrong, and the more stupid you actually become. Because the point of interest is here. I'm waiting for a retracement to take a long. And what I'll do is I'll say, instead of waiting for price to trade into the point of interest, since I know this is my point of interest, I want to sell into there. And most of the time I was just basically going against the trend, right? So it's in level 3 you start to think in series and not single trades. You basically stop looking at your performance daily. Like, it doesn't matter if you had 3 days in a row where you are winning. You start to measure your performance monthly, maybe weekly. I think weekly is still small. Monthly, quarterly, maybe every half yearly and stuff like that. So this is actually the first level where you start to see some level of profitability. Okay, it's 5:10 in the morning. I'm still recording. Now, a lot of people think, Merry Christmas, by the way. Merry Christmas. Now, a lot of people think the third stage is the final stage, which actually is not. And level 4 is the final stage, which is the detachment phase. This is basically where you start to pay attention to the process and not the money. So there's something about Forex people get wrong, is that they think they want to play the long-term game, right? But I want you guys to scrap the idea that you're playing the long-term game, because sometimes the longest route is the shortest route, because that's the only way possible. So the thing with trading is, if you try to take shortcuts and try to arrive at your destination, you're basically going to see that you haven't gone anywhere. It doesn't matter how close you think you are to your destination, you are always closer to zero than to your destination. So it's easy for you to always reach the bottom much quicker than you reach the top. When you get to the detachment phase is when you start to understand that trading is about building systems. You choose the process over the money, basically, right? And you start to see you don't need to win every day, you don't need to force trades, you need to allow the trades come to you, right? And then there's this quote T.D. Jakes used to say. He said, fame is a consequence of being effective. That is, for you to become famous, you must have been effective in certain areas. And that is the same thing in level 4. You get to understand that making money is a byproduct of building systems and consistency. So money wouldn't be the goal for you at first. It is basically being a very good trader that is first for you. And that's where you basically scale and you're able to get pro-firm accounts, grow small accounts. And the mistake here is a lot of people think within a short period of time they're going to jump from level 1 to level 4, which is basically very impossible, right? So that is basically when you start to understand that trading is more psychological and not just technical as well. It's about building a mind that is so strong that it scares the market. So, and that is why I actually made a video that talks about building a mind so strong it scares the market, which I just want you to check out right now.